Hey guys, hope everyone is doing good and we are heading to our fifth episode on momentum investing. So I would like to show you where we are in the momentum investing and also the live. This is like an account, okay. Where we started with momentum investing in the ETFs, okay. So which is what the heck? Yeah, ETFs. So we have invested almost the starting capital was 25K, but unfortunately we got an exit. This was an exit because we got a tech Hang Seng Tech Index is there to buy, but unfortunately because of volatility or something, they were not able to accept the orders. So again, we currently it is not accepting the order. This okay, so ETF might be not working there. So we thought, okay, it is not going to work. Then again, we re-entered into silver. It's the tracker, I think. I'll show the tracker also this moment. And yeah, the strategy is taken from the Biban farmer, and okay, he uses 10-month moving average. This is the simple strategy, and then nothing beyond it. Then as usual disclaimer, I'm not asking you to invest or anything. It is in no, it's not a financial advice also. This is incubator portfolio. This is not my main portfolio as well. Okay. To choose ETFs, this you can use these passive funds. Okay. Then buy sell is there. We have entered at and exited at within 34 days. We have exited. Then again we got an entry at 95.5. So this is how it is going on as of now. Today it is less than more than 37,833. Okay, as of today. So I didn't record it for November month. Okay, that's all from my side, guys. I think this is the momentum tracker which we have updated. Okay, so let me go through this. We are currently in silver. Okay, it's a least update because it was a long month back. We have posted a video and there is no update. Okay, so I just thought of recording it. So I'll go through some charts as well. Okay, we were in Nasdaq ETF as well, but unfortunately it was sliding below 10-month moving average. We bought it around this area. Okay, this or this candle, I think. If this doesn't go up within a week, we will get the exit at the month end. For sure, we have to exit at this candle as per rules. Okay. Don't look at other moving averages. I will be testing multiple things, okay? But as for now, we are following only one thing, 10-month moving average. Okay. If it is closes below, I have nothing. I have to exit, but if it comes after whipsaw, I will be good to hold. Okay. But if things goes wrong and comes below and it get crashed, nothing to worry. Something goes wrong if it is goes down and gets this place. This can come. This can also come. There's nothing wrong in this. Okay. 31 percentage it can fall because if a burst comes, something can happen, right? So that's how again if it you will be going This is completely tech index. But in case if it goes like this, okay, let me go see. If this happens like this and this, we are happy to hold it. Okay, no issues. But let's see how it is going to happen here. Here I'm seeing a pattern. 1, 2, third. Third is the peak. See, 1. So this might be assumption also. Okay, just cancelling this. We just use this one. First peak, second peak, third is going to first peak, second peak, third is going. The pattern is repeating again. I don't know. See, same thing. This is not a coincidence also. See, first thing, second thing, third is breaking down. So I think we have to exit it now. Yeah, at the month end, I'll wait for month end because it is a rule-based strategy. Okay, so we have to wait. But this is new to me also. Just now I'm observing it. Third thing is we have to exiting it. Look at this. It is happening currently. Oh my god. Okay. Then we got an exit, I think. So we have to exit. This month we'll be exiting because if it falls further also, might be I think I'll be in slight loss of 1%. But yeah, there will be a time waste as well. Was more than 4 to 5 months, more than that. But what can we do? This is a strategy. This is completely mechanical. You can't take any discretion by 6 months. We can't take any discretion kind of discretion is something which mechanical is something. It's completely rule based. You have to exit when the rule comes. Okay, but rules have to be formed in a better way. So let me go for this XAG USD as well. We have entered around this area. Okay, this is the where area we are holding, still holding it. And why we are still holding it? Okay, we are almost same 55%. How much we are here? Almost 57%. But see, here silver is some such more volatile, and here we have given one more rules. When there is an engulfing candle like this, we try to exit. Okay. If I could have exited, I would have made 100%, but I have left it to 57%. See, 43% till now. It's because we are developing the strategy. These strategies need to be developed. If you fix a rule like if it is going up and up and up, if it is fall below 20%, if you have to exit, that is also a rule that you can formulate it. Like let me say, what I'm saying is if it after an entry you took an entry after it is going like let me put it as a in weekly time frame around this area you got an entry. I think if it touches this area you have to an exit 21 moving average. Okay, I'll be exiting when it touches the 21 moving average. Then you have to look it for other asset because if it has ran this much then we have to wait. But unfortunately, we have not devised any rule like that because we just moving with the monthly time frame, right? Because we are not rebalancing on daily, and I don't want that head pressure as well. Monthly works as a whole. See, there are supplies, but I think the supply is getting absorbed, and currently you can see what kind of candles are forming. These are good candles, but yeah, last few days we got this isn't supply, right? Overhead supply. These areas are supply. So it is getting absorbed. After reacting to supply, it has came down. It has taken all the demand. These are the areas of demand. So it is absorbing the demand. Price reacted from it. If it breaks down, definitely I will be selling it. See, if it is break this area, there is no point in holding to silver again. because we have at least we have to pocket out 33%, 30 and above percentage. Why you have to I have to leave that percentage? Okay, so for silver, still we are holding it, and I don't want it. See why I'm for not following silver 10-month moving averages. If you let it to fall till this area, look at another one from this to this 28% gain. 28% is not a small thing, guys. So that is the problem with the silver. Okay, when it goes to other asset, it can go slowly also. Okay, but it's not going yet. And one more thing which we have updated in the Telegram as well, we thought Nifty mid cap 50 ETF. Yeah, it's even attack. I have asked the guys to buy right based on the see this. It is coming out of this 10-month moving average. It is forming a good base. Look at the base formation. It's forming a good base formation. This is a slight cup and handle, right? This is a cup. This could be a handle. Pardon for me drawing also. So if you are rebalancing in monthly, you are a little bit peaceful, guys. Little I'm saying. If I get an exit in silver, I will be entering into Patak. This Nifty mid cap 50. Okay. Why mid cap 50, not mid cap 150? Okay. For that, only simple answer is this. See, let me put it in mid cap chart. Here I got an entry and here I got an exit. But unfortunately, from next month I got an entry again. Okay. So as per strategy, when it is about 10-month moving average, we will be buying. But unfortunately, it has closed with this area and we have bought it here. I'm not saying this area. Okay. Let me clear this. After a consolidation range, so after the fall, we have ridden the trend after this to this. Here we got an exit. Here we again got an entry, which is again into stop loss. Okay. See, this happens in a ranging market. But yeah, but when it comes to breakout, see, it has come into these levels. But after an entry, we get an exit at these levels. But again, we got an entry here, and the exit was exactly this area. So we avoided this much fall down. Okay. And after this fall, what has we have been able to capture 65% gains. But what has happened in Nifty mid cap 50? We have not closed again below this range. You can see, right, we have not closed, so I may not exited at these levels. So I feel there is a little edge over Nifty mid cap 150 when it compared to Nifty mid cap 50. Mid cap 50 has little over edge in terms of 10-month moving average compared to 150. That's all. Exit strategy is same. You will be one mid cap 50, you will be entering here. Mid cap 150, you got an entry here. But mid cap 50, you got an entry around this area. You have not exited this. Let me paste it. This area too, you got better returns than Nifty 150, right? That's what I need. So more than this was almost 2 years, more than 2 years. But let me think. This was more than 2 years, 82%. This literally gets to 41% per year gains. So post tax, you will be getting around maybe 35 to 38. Yeah. So What 38% per year is phenomenal, guys. You cannot even imagine. So the same thing is happening now. See, I am a former believer of momentum indexes. So see, let me be frank, per month I'll be making one video maximum. That too, if we get any position changes only, I'll be making video. So this was after 4 months. I think after 2 to 3 months, I'm taking making this video. So I'll give as much knowledge as I can. Okay. So those who want to continue, please continue. Those who believe he's blabbering something, okay. There's no offense. You guys can no. Okay. I'll share as much knowledge as can. So I'm firm believer of in momentum indexes, guys. I think I can say. Oh, the momentum indexes. See, this is one of my accounts. This is not my main account because I created only this incubator portfolio here. Because I have read value investing as well. So those stocks and my mutual fund portfolio is completely different area. So strategy based indexes. Let me go for momentums and all. The Kotak is there. You can go for 500 momentum is also there. See, everything is there, but what I understood is momentum is good for investing. But when you are, why I'm not investing in the momentum ETFs? Okay, the problem with momentum ETFs. Okay, let me go for momentum ETFs. When Nifty 50 has already, let me open Nifty 200. Where is Nifty 200 now? Where is Nifty mid cap? Nifty momentum is there. It has reached all-time highs, but momentum. Okay, let me price. Oh, look at this. It should reach 74, right? Here also you can take an entry. I'm not saying momentum is very bad, okay? Because momentum has ran a lot to be precise. You got an entry. If it is closes at this area, you got an entry. This was a close, you can get 79%. Where Nifty mid cap 50 has given 84%. Entry was same, exit was also same. But I think momentum is good for investing in the long term. Okay. Why I'm saying is momentum indexes will run heavily during bull runs. Very heavily. Okay, let's compare with Nifty 200. Let's look at the index. Okay, getting it clearly in the chart. See, let me close this. And you can see, even though it is in the all-time highs, you can see how much it has run in the bull market, how much it has run in the bear market. Even after the bear market, see, momentum is not near its all-time highs. So, but Nifty 200 is nearly in there, near to its all-time high, right? But in normal, you are able to achieve 63%. In momentum, you are able to achieve 68% just by putting monthly SIPs. Okay, you will be beating the index. Okay, so I am the former believer of much in the index. Why in the momentum index? Why is it is made for very long term? Okay, so I don't know whether I will be able to get mid cap 150 momentum. I'm not able to get the index. Okay, but to be honest, mid cap 150 ETF, right? We can compare it with. Here it is almost similar, but I believe momentum, even though it is similar, you can see the returns. Look at the returns from the same area. 282 and 270, almost 1% alpha is there. More alpha is there. Oh, I think, yeah, more alpha likes on the momentum side. Same steeps, right? Nifty mid cap 150 is completely different when it compares to Nifty 200 momentums. Okay, so for this, see, I'm just throwing a waste paper to you saying momentum will work. You have to open that waste paper. Okay, there is something saying the momentum and what is this called. You start studying in the YouTube. There are so many webinars, and there are CFA Society. They have two videos. Manish Dhawan has taken on the momentum indexes. So it was absolutely fabulous. Okay, so learn from that. Okay, that's what I believe. Okay, here when it comes to momentum, this is also above 10-month moving average. So you can buy here also if you want safety. Okay. Two things. Again, I'll look into two things as if I buy here. What is my stop loss? 8%. When I go with Kotak, Kotak Nifty 50, mid cap 50 ETF, right? What is my stop loss? Here it goes to 9 to 10% almost. So at the time I can think, okay, whether we can go for Nifty momentum or this one. I believe both will deliver similar returns, but when momentum catches up, it may run like anything. But I believe I can go with this one. Even 10% is negligible. That is 8%, but you are more concerned on that 1%, you can go on with that ETF. Okay. I'm not bothering it. Okay. Because here breakout has already happened. Yeah, there they are just starting out. But let me be frank, guys. Major disaster happens below the 10-month moving average. Okay. Let me show with back-tested data. Back-tested. See, these are the. But yeah, let me be frank. The strategy works when it is bear market or bull market. When it is in a consolidation or bunny market, you will be frustrated like core. You'll be frustrated to core because every month you get an entry, next month exit, entry, exit, which will take at least 8 months. And see the great 2008 crash. Whether you guys able to see? Okay. Now you guys are able to see we got an entry around this area. This is not, I think this is not closed. This is a, this you can take it as a close. Okay, let's take it as a close also. I don't want to debate on this. I think this will be much lower at the time. Okay, so let me take it as a close. Let me got an entry this way. Then where you got an exit, the 2008 crash, making 126 percentage. Let me put it in this scale. This can only measure the dates as well. Almost more than 4 years, right? 125 percentage. 4 years divided by 125, almost what? 30, 30, 30, I think, yeah. Per year, 30 percentage. So, but fortunately or unfortunately, after that you can see the decline levels, 51 percentage. Where it has started, it has ended. The same thing. After that, you get an entry at this levels and exit at this levels. But you will get an entry at this, exit at this, again entry at this, exit at this, again entry at this one, next candle, exit at this one. Look at the difference. It was just, this was enough to pay your brokerage. You get an entry at this level, but you get an exit at this one, 30 percentage within. This was 30 percentage for 570, almost 2 years. So you will be pocketing out 15 percentage per year. But drawdown, after exiting, what you will get to? Okay, let me go this way. Where you got 1/4/2015. Okay, you got an exit. 1/4/2015. 1/4. You don't have an entry here also. So both the paces of 1/4/2015. Nifty is also down, gold is also down. So at the time I have no entries here. When I can go for 1/4/2015. Here I got an entry, but that too also entered into the vein. You have to bear this 5% loss. So at the time you have to know there's no other way. If everything is going down, you have to wait. So after exiting it, you will wait for some more candles to come up and we can do something. Okay. So that's how momentum work. At the time, you have to sit in. Now you have one overnight funds, and Zerodha has launched it overnight funds also. So you can park the funds there and let it earn the savings account interest, and you have to wait it until you get a proper entry in Nifty 50 or something. So as per strategy, everything is clear, I think. Okay. The Nasdaq also works in a clear way. Here Nasdaq is forming something which we have to more conscious. Why I'm saying is I have been following Nasdaq. Okay. How many of you know Elliott waves? This can be first, second, third, fourth, and fifth. When fifth wave completes, what it can do? Take this as a, so it can fall up to 50%. I think this is even possible. Let me take this out. Let me hide it as well. So let me put it in a brief way. So this area comes into 50% levels. So what it can do if the A bubble burst 30% drawdown. But as per me, this is everything is already done. I think that you can show technicals is showing something. The Elliott waves has already confirmed something is going to off is happening in the US market. Okay. Okay. Whether you have to take an entry there now. Currently, I will not looking. So I am not a big Elliott wave practitioner. This is just you can they will draw minute waves also. But yeah, but what I can say is I have entered around this area. If we want to fall below this area, it will have to break this, right? So I will exiting at around these levels. What happens if tomorrow it forms a green candle and go up? My Elliott wave theory is wrong, but people will say it is a fifth wave, it can go up to this levels also, then it can fall back. I don't mind in carrying even it is above 10-month moving average, I have no issues in holding to it. Okay. So see this area I have exited it. Again I have entered in the Nasdaq. See this majorly use this concept on indexes, guys, because don't apply it on stocks. Indexes are done to move majorly on the upside because they do their rebalances. They have their own set of stocks. They choose the stocks based on some set of rules. So those things is already done. Major part is already done. So buying an index at current levels makes us more money than stocks. See, stocks, if you apply this concept, stocks behavior will be something very, very you can't even predict it. And stop losses will be heavy, huge in stocks. So currently I'm looking. Why I'm saying is this could be a fall. See, this is how I just look at the areas where the target is coming. First wave will be same as third, fifth wave will be same as first wave. They will be saving. We have achieved the target. So I think this is the where the meltdown will come. We will see another fall for this. Okay. See this is I have done. I have said it before. The fall has already started. Let's say BTC. Recently, I have exited all the BTC. I think this is the BTC chart. Look at the 10-month moving average. Look at the roll of 10-month moving average. See, there is no exit, no proper exit, no proper exit, no proper exit. No close, no close, no close. This is a close. After the close, you can see 63% now. Now, what is going to happen? This is again going to close below the 10-month moving average. The bubble has started. See, even it is able to climb this 12% within this 7 days. I think this is not possible because there is something off with the Bitcoin currently. So I don't want to go into that. So I told I don't want to hold it now. Let it come to this area, 78.6% or below this. That is the good area, 31,000 area. So we can buy it there and hold it until it is below the 10-month moving average. So that's how you make money. I don't want to teach some nuances like this is the value buy. We are going to get so much cheap. This is the business. See, I can teach that way also, but that's not going to help you for the layman terms. Okay, if you can follow this systematically for more than 20, 30 years, the same strategy. Okay, I will put it in the God. We just have it. Let me go with clear tax is good to go. Because on those three calculators I have already used, those never accepts my inputs. We have 25% as an initial capital. If you are able to make 25%, sorry, for another 30 years, 25%. No, none of the capital is extra added. Just following simple rules. That's all I'm saying. 25%. Look at the returns you are creating. So see, there are some implications as well. This if you are making 25%, at least you should make 30% to make this post tax as 25%. But I think this is possible. I don't think this is not a possible with this strategy. See, simple strategy works a lot, guys. That's the power in the market. You think a lot. You keep on saying something which is just 25,000 can go into 2 years. I think you guys will say me mad, but after 30 years, if I was alive, I'll make a video say I have done this strategy from that day till date, because that is how you should be. If you are able to put that 1 lakh with this simple strategy, you can earn 8 crores if you made 25% CAGR on an annual basis. Okay, why I'm taking 25%? Some years you can make more than more than 30 or 50. Like silver, I have made 57%. It's not squared up, but I make sure it is squared by 40%. If it is go below 40, I don't hold. So at the time, my effective rate is 30. So now you are capturing the trend. Monthly one rebalance, no tension. If it is fall below 10-month moving average, no other questions asked. Simple exits. What is the problem? So this is how we do this strategy. Okay. So that's all from my side, guys. I think this video is huge. So, but this will be power packed with knowledge. So once again, momentum tool is signing off. Bye.